Hey guys, Chris here with Cashflow Investing, and I'm here to talk about 5 stocks I like better than the S&P 500. So this information is probably dated for some of you more seasoned investors, but I know when I was getting into it, I would have liked to hear some of these opinions. So these 5 stocks are more or less the largest stocks in the stock market right now. So really, when you see for example, S&P go up or down for the day, more than likely if it's up, these are the stocks here that are driving it. There are also some of the top bought stocks by hedge funds who employ way more money than us individual investors and really get things moving. So if we look here, the first stock is Google. Take a look at the 5-year chart, pretty stable growth. Personally, I'm a buyer under this $1,100 mark. It'll be interesting to see if we get down there again on another dip, but it's definitely one to keep in mind. The growth out of this company is just crazy. About 20% growth year over year. And another important factor with all these stocks I'm about to talk about is their profit margins. Basically, every single one of these stocks is beating their sector median. And with that, they're all basically 40 plus margin. This margin is how much return they get for each dollar they spend. Second stock here is Amazon. About everyone watching this video, I'm sure, is familiar with Amazon, and they're probably one of the few stocks other than Clorox who wasn't affected by the recent downturn, actually hitting all-time highs today. As you see, they didn't really dip much, maybe 10% there if you were lucky, but I don't think you're going to get too many dips off this stock in the future. I mean, it's priced to perfection at an 84 PE, but this is probably one of the stocks that can actually grow in to that valuation, which the valuation is currently sky high. But again, you have that 20% yearly growth rate and a large 40% profit margin. Moving over here, this is more of the risky play out of this bunch, but in my opinion, if you're looking for larger returns, this is going to be your ticket. And I'll show you that towards the end of the video, so stay tuned. But I mean, there's crazy growth again off this company, and it's actually got a pretty substantial dip here where it might not be a bad buy. Its PE is also the most reasonable out of the bunch at a 20, which for a tech company is pretty low. For some reason, the market as a whole values tech a lot higher than other sectors. Year over year growth, very good. 26% year over year. Their profitability, 80%. Okay, margin. This stock has so little physical assets driving their profit because it's just so scalable, advertiser friendly. I don't understand why this stock is not valued at the levels forward PE as these other mentioned in the video. It's probably worth picking up a couple of shares. Apple, this is a company very popular in the stock market. Personally, not a big fan. I do like that they are changing over to drive a lot of their future earnings off subscription models, and they're getting away from more of those hardware sales. Back during this period, this stock was largely driven on the growth of iPhone sales. If those sales numbers were down, so was the stock. I actually swing trade this stock back around these levels, but sold out around here. So as you can see, I left a lot on the table, but just not a stock I'd like to be invested in right now. and overall my portfolio is a lot less tech heavy and a lot more towards that dividend growth side, which you'll see in future videos. This is one of the tech companies that pays a dividend, although it is very small in comparison. Although they are growing it at a pretty rapid rate, so hopefully they'll continue that here. Yeah, growth's not that good right now, but they are very profitable also. Microsoft. Out of all of these stocks, I'd say Google, Microsoft, and then Amazon would be my picks for my personal portfolio. But as a pure play, I think Facebook's a really good option. But Microsoft is a super swan of super swan. I mean, you don't have to worry about this stock too much. Personally, I think it's a very good buy when there's not too many other good buys in the market. I mean, if you see this period when basically everything in the market was overpriced, they dropped about 11% to the bottom and they're already back up there. They are also a company that is going heavily into the subscription-based model to drive profit versus their old selling licenses. Again, their growth rates there for dividend growth, payouts pretty low. I like that. And they're a cash flowing machine. Just look at that. Growth slightly on the lower side, but again, this is a huge company. Profitability killing it with that subscription-based, scalable, easily online model. So then, this is interesting. You go to their peers, basically the companies I just mentioned. They're all over, well, aside from Facebook, all over $1 trillion companies. That's why if you were looking for a long-term growth play, I think Facebook might actually be the better buy, as small companies have a hard time to grow, large companies have a harder time. So you get those large companies, but they're not super large in the trillions. 500 billion is still a massive company, but they're small enough and agile enough to steer that ship and go where the growth is. They also have a ton of cash sitting around waiting for that next Instagram to pop up so they could buy it, monetize it, and do what they do best. So that's all I have for you guys today, but stay tuned and maybe I'll share some more of my dividend growth side stocks. But I thought this is a good video for more of you tech investors and seeing how 5-fund portfolio be very tech heavy, very concentrated, but somewhat low risk due to the fact that these companies, I don't think they're going anywhere anytime soon. Thanks, guys.